Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 13th of December 2021 and we're producing our regular morning update, providing prices, news and economic data to be announced. This morning we see gold and silver little changed ahead of the all-important FOMC meeting due to be announced on Wednesday. But is this just a temporary pause? Well, before we take a look, we draw your attention to a video we produced yesterday, why Wednesday's FOMC is crucial for gold and silver prices. And we sincerely hope you take a look at that, and we've provided links below. Let's now have a look at what is happening today. Welcome to Illuminati Silver. It's Monday the 13th of December 2021 at 09:27 in the morning. The weather today is leaden. L-E-A-D-E-N. Rather dull, rather grey. And we thought it an appropriate term, bearing in mind we talk about metals. Though, admittedly, lead is not necessarily a precious metal. What's also rather leaden, dull and grey is the Omicron virus and how Prime Minister Boris Johnson is warning us of a dull and grey future because of Omicron and its effect on sterling. Let's take a quick look. Johnson warns of UK COVID emergency, sets booster target. Prime Minister Boris Johnson warned the UK is facing a tidal wave of Omicron infections and sets an end-of-year deadline for the country's booster vaccination programme. Everyone eligible aged 18 and over in England will have the chance to get their booster before the new year, Johnson told the nation in a hastily arranged address on Sunday night. Johnson, who's been the subject of scathing headlines over his handling of the pandemic, tried to change the narrative in a sombre address. While he is accelerating a plan to deliver booster jabs, in practice, he's bringing the deadline forward by a month. Well, this is having an effect on sterling. Pound woes mount as Johnson wars of Omicron tidal wave. There's trouble brewing for the pound after UK Prime Minister Boris Johnson warned of a coronavirus emergency. Institutional investors have taken their biggest bets against the currency in more than 5 years. Sterling fell 0.3% to $1.32 as of 8 o'clock in London, approaching a one-year low after Johnson said a tidal wave of Omicron infections threatens to overwhelm the country's health system. The message added to fears about the country's sputtering recovery, which has caused traders to pare back bets on a Bank of England interest rate hike this Thursday, which just weeks ago looked like a done deal. Now, this is really important, because on Wednesday we have Jerome Powell of the Federal Reserve announcing on behalf of the FOMC of the Federal Reserve what is going to happen to interest rates, or perhaps more importantly short-term, its bond buying program, whether it's going to pare more aggressively than it otherwise has alluded to. And now we have the Bank of England potentially going dovish. And this is really important for the dollar and gold and silver prices, because the dollar index is made up of 6 currencies: the euro, the Japanese yen, sterling, the Canadian dollar, the Swedish krona, and the Swiss franc. Now, the largest element of that is the euro, 57%. And we've already seen the European Central Bank looking at ways of being as dovish as they possibly can because of the financial crisis. The Japanese yen is then 14%, but sterling is quite a reasonable 12%. So if we find that the euro continues to fall and sterling falls against the dollar, then of course proportionately the dollar technically rises, because all the other 3 currencies combined, or 4 currencies I should say combined, cannot really outsmart what happens between the euro and sterling, thus potentially acting as a headwind against gold and silver prices. So it's going to be very interesting. We've got the FOMC on Wednesday, and then we have the Bank of England on Thursday. and we shall see to what extent the dollar strengthens. We think it's going up. We'll wait and see if that actually materialises. Traders delay bets for UK rates rising to 1% amid Omicron woes. Traders are paring back bets on the Bank of England rate hikes over the next year as concerns over fresh COVID restrictions outweigh inflation fears. Money markets are wagering the central bank's key rate will rise to 1% by 2023, whereas just over 3 weeks ago, traders saw borrowing costs hitting almost 1.25% by the end of next year. And we see as well, Reuters, Britain says Omicron accounts for 40% of London infections. Are we now seeing a prepared narrative by the government, leaking perhaps to the media, that it's quite possible that interest rates will not rise this month in the United Kingdom? Business news, or should I say BBC business news, half of families £110 a year worse off since 2019. Work from home guidance reintroduced in England. Royal Mail staff absences almost doubled 2018 level. US and Canada. Kentucky fears more than 100 dead from tornadoes. You do have some bad weather over there, but it is a large landmass, to be fair. 100-year-old church destroyed in seconds. Daughter of first US astronaut blasts into space. And top US court lets abortion clinics sue over ban. I would have liked to have seen a little more economic news in view of what's coming up this week. Dollar index actually up 0.26 at 96.35. We think it's going higher. We'll wait and see. Unfortunately, oil prices are also rising in spite of the dollar going up, albeit only $0.50, but still rising nonetheless. Equity markets, as we produced in our weekend update in the US, were really quite strong last week, and Friday was no exception. Asia Pacific, generally positive territory, not by much, but still positive. And Europe and UK markets this morning, again, positive territory, anything from 0.25% to 1%. Now, as we mentioned in our weekly update, and we've got a link below, no economic data coming out of the US today. But tomorrow we do have the NFIB Small Business Index, but perhaps the more important piece of info tomorrow will be the Producer Price Index. And then we have a plethora of data on Wednesday, including the FOMC announcement. Gold prices this morning, I'm refreshing the page. They were up $3, but they've fallen back slightly at the moment, and we have gold up 72 cents at $1,784. Silver prices were up 2 cents. Let's refresh the page. Actually now break even at $22.20. Cryptocurrency markets are down 0.76%, with a market cap at $2.24 trillion, and Bitcoin falling below $49,000. Yesterday, we produced an important video. Why Wednesday's FOMC is crucial for gold and silver. Now, we've put a link to that below, both in the description and in the comment section. Do please listen to that, because we are very doubtful that gold and silver are going to be major beneficiaries this week and over the next couple of weeks. Long term, we remain very positive, but short term, we're struggling to see how it can break out, in spite of all the so-called experts telling you it's going to the moon. We even saw one by Rick Rule yesterday commenting, or at least the headline, commenting that a major breakout is due. Well, we'll wait and see on that one. Thank you so much for listening. Please give us a thumbs up, subscribe, press the bell sign, join us tomorrow for our daily update, and if anything breaks before then, we'll try and put out a quick last-minute video. That's why it's so important to press the bell sign, because unfortunately, YouTube, with very, very few exceptions, perhaps once a year, does not promote our videos. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.